a particular segment of the market, Amit, that is providing some floor in this correction is the metal stocks. Please tell us why.
Now, China, the reversal in the fortunes of China's economy basically was good news for metal manufacturers and explorers, because they are the largest consumers of metals across the board, whether it's aluminum, steel, zinc, manganese, whatever. Now what happened yesterday was that US and UK imposed sanctions on Russian supplies of metals, which made aluminium and nickel specifically surge 9 and 8% in the Western stock markets. While one was good news, how do we see the metal stocks in India? Things like companies like Hindustan Copper have given returns like 258% in the last 1 year. 117%, Steel Authority 84%. Mohit, where do you see metal stocks going? There are mixed signals. On the one side, China's growth basically was good for the metal industry, but that is tapering off now. There is news that the growth story of China is tapering off. And then there are these new sanctions on Russia. Do you think it is good news for Indian metal companies?
Hi Amit. Look, honestly, I think you said it all. It's a mixed bag, and depends on how you want to look at it. We'll have to go stock by stock and figure out what is the dependence of each stock and what is the main supply source and origin, and so on and so forth. Having said which, I think the ban by LME on Russian metals being imported only by US and UK, my sense is, isn't much of a dent. To be very honest, Russian metal has been selling, and China has been buying Russian metals directly. And the Chinese imports of Russian metal has been growing dramatically over last few years. In fact, Chinese aluminum import from Russia is at an all-time high. If you check last year's data. Right, and Russia continues to remain a large global supplier of aluminium, nickel, and the grade one nickel. I think Russia supplies almost 14% of world's supply. So I think Russia continues to dominate that thing. Trying to curb the Russian supply will mean that the prices will break. For Russia, the prices will break in the non-LME markets. Which means Russia will have to sell its inventory cheaper, and perhaps that benefits China and to some extent maybe even India. Right, and I think it should look. There are two ways of looking at it. Cheaper raw materials, if India can source directly from Russia, like the way India has been doing on the oil front, I think will augur well for the companies, and should reflect in higher what do you say the inventory costs any which ways are getting repriced, though those are all mostly hedged. But my sense is it should augur well for the metal companies in the near term. However, a very large, long-lasting impact, you never know how the second order and the third order impact plays out on this one. But my sense is in the near term, if India can source direct supplies from Russia, and if the companies individually will have to check, can perhaps figure out a way to get their raw materials or inventories directly, then I think it augurs well for the metal stocks.